If you had an option that could make you a lot of money, would you turn it down? I'm Erik Brenner. We'll explain why it happens next on Your Wealth Health. Hello and welcome to Your Wealth Health. I'm Erik Brenner, owner of Hilltop Wealth Solutions. If you're watching us on Facebook, if you could please share us with someone. And thanks for watching us on yourwealthhealth.com. With me today, I have Bill Davis, one of our private wealth advisors in the firm. And we are continuing to practice social distancing. Bill sits about 8 feet away on my right. And what we want to start off with today is we want to start to talk about potential stimulus package. As of the filming of this show, Congress has yet to come to a decision. But as we continue in the global pandemic, it is important that we discuss current topics and kind of where we're at. So Bill, there's a lot being said right now, and doesn't seem like we can come to an agreement. We do think that there will be some relief ultimately, but kind of where do we stand as a firm and how do we think about it?
Yeah, Erik, certainly the Congress is a long way apart. I think one side of the aisle is looking for about $1 trillion in stimulus. The other side is looking for $3 trillion. It's just amazing that we're talking numbers in that to that extent. So President Trump came out with an executive order to try to, I think, move the discussion forth, so that involves helping with the unemployment that was $600. The pandemic unemployment was $600 additional for those unemployed. And he's thrown out an executive order that's talking about $400. There's a potential stimulus check that's not in the executive order that was in the congressional approach that they're trying to hammer out. And so eviction relief is a big thing that, the president's concerned about people not being able to make their mortgages, people not being able to make their rent, and concerned with people being evicted from their residences. So that comes into the executive order. It's yet to be known whether the executive order is actually going to hold any water or not, since the Senate and the Congress has to approve any expenditures that would be coming out of the Federal Reserve. So it's way up in the air right now as to what this week will bring, and whether they'll come back to the table because of the executive order that went into effect on Saturday.
So Bill, in the firm, we take and we certainly pay attention to what's going on in the economy and the markets, but yet when things are a little bit up in the air, until they come to an agreement, it doesn't mean a whole lot. But what does it mean to come to some sort of agreement? We still are in this global pandemic, even though it doesn't really appear so based on the markets. But we do think that more stimulus probably is needed.
Well, yeah, Erik. I mean, it's we have 30 million people that are still unemployed. 11 or 12% of the population is currently unemployed, so they're in need of some assistance. And although, I think the $600 was a little bit of a stretch, I think the $400 additional per week could certainly help people get through this period to see if we can get this economy back open. And as we've seen in California, Texas, Arizona, Florida, they moved quickly to open up their economies, and then, it came back, the pandemic started to spike in those areas, and they had to go back into a shutdown mode. So, I think some kind of stimulus is going to be required, but it's really uncertain with the tensions that are in Washington right now on how they're going to come together.
So, with all this, Bill, we continue as a country to take on more debt. So, how do you think about that as a concern going forward?
It's gonna bite us. I'm telling you. It's what we've already taken on an additional $4 trillion. Now they're talking between another $1 and $3 trillion. That during this low interest rate environment, it's serviceable. but it's growing as a percent. The debt service has grown as a percent of GDP to numbers that may be unsustainable going forward. So while we're in a low interest rate environment or zero interest rate environment, we can service this debt, but it's going to be difficult to pay this money back, and there's going to have to be some legislative activity to start to plug the deficits that we're experiencing as a country.
So, Bill, here we sit 8 months into the year. We started off with the Secure Act, which was the biggest piece of retirement legislation in more than a decade. And then we got into the global pandemic and the Secure Act. And so let's highlight some of the things that happened within the CARES Act that people should not forget, because some of those things are continuing, and maybe that could help them through all of this.
Yeah, I think one of the biggest items, Eric, is the elimination of the required minimum distribution for this year, and the ability to through the end of this month. I want to point out August 31st is the deadline to return any required minimum distributions that may have been taken out earlier in the year, and so that could be an opportunity for somebody to consider some Roth conversions or other repositioning of assets out of the individual retirement account. In addition, Eric, they're now allowing a pre-59.5 without penalty distributions from an individual retirement account or your qualified plan, 401k, for example, or 403b. And that's up to $100,000. So if somebody is furloughed or they've lost their job because of the pandemic, they can get some money out of their individual retirement account without that 10% penalty that would normally apply for someone under the age of 59.5. So I think those would be two significant highlights that people could take advantage of during this difficult time.
Yeah, I think those are really important. And you said that if they qualify, and one of the things that I think is important to remember is there is a qualification period to kind of, or qualifications that they have to not pay the penalty. But it's pretty broad, Bill. I mean, it's a pretty broad thing, and so you may be able to qualify for that, and so that's important. And the other thing that we've stressed on the show is, we are in this extremely low tax environment, tax level environment, the lowest in history, and so there are opportunities here that we will continue to talk about Roth conversions and other strategies to keep us in those low tax environments. So.
Yeah, people just need to, they need to know what their effective tax rate is, and with this debt load that we're taking on, it would be difficult to assume that taxes are going to go down in the future. It's most likely that taxes are going to go up. So now would be the time to take advantage of understanding your effective tax rate and potentially getting some retirement assets repositioned to Roth or non-qualified accounts at this point in time. I think it would be good for people to consider that this year.
Great. Thanks, Bill. This pandemic has been difficult for all of us. It's raised awareness about the need for financial advice. But most people don't seek out financial advisors. Why is that? We'll have some answers when we come back.
Built on a legacy 4 generations strong. Clayton Hoover & Sons Home Improvement. More than just our business, it's a family legacy.
Welcome back to Your Wealth Health. I'm Erik Brenner. As we said a little earlier in the show, these are difficult times. People are doing what they can to stay healthy and prevent the spread of a COVID-19 to others. And many are worried about their money and financial decisions. When you have concerns about your health, you see your doctor. So why is it when you have concerns about your finances, you may not seek advice from a professional? You know, studies indicate a large majority of people don't have financial advisors. And here are some of the reasons, Bill, and I think they're really important ones. Number one is they feel they can't afford one. So we can address that in a moment. Number two is they don't want their finances scrutinized. You know, and I could see that, you know, just like your health, when you go, it kind of bringing you to reality. Certainly trust issues. So trust issues has been something that has been a highlight over the years. So do you really trust that person? Are they giving you the best advice for you, or are they just trying to sell you something? Or that finally they feel that they can do it themselves. So Bill, let's dig into these kind of reasons why people really do not seek out advice.
Yeah, Erik, it's really a great question, and I've been trying to answer it for 24 years that I've been in the business. Is that, you know, I think people come to stages of their life that they start to take, you know, financial planning serious, whether they're thinking about retirement during these times that people are being furloughed and losing jobs and, you know, trying to determine, could I retire early? And you know, until it's kind of like right in their face, it seems like people don't want to meet with a professional for some of the reasons that you mentioned. I mean, they could have had a bad experience with a product salesperson, which is why, you know, being a fiduciary like we are at Hilltop is important to, you know, that we're only going to recommend services that are appropriate for the client's situation. And, you know, if they've experienced a product salesman, it just seems that the fear that people have is that they're going to be sold something. And that could be true with a lot of other professionals. And so it's very frustrating. It's always been frustrating for me that people that need help don't want help. And so, you know, during this pandemic period, I've had a lot more conversations with people that are like, hey, I really need some professional advice. And so I would just tell the viewers that, you know, give it a try. Give a 30-minute phone call or something to a professional to determine if you need help, if you want help, and then how does that person then price their services to be able to help you.
You know, Bill, I think one of the things that's important as I think about this, and I've shared with folks over the years, is, you know, 25 years ago, it was such a different environment, right? So people worked somewhere. Many of them were fortunate enough to have a pension. Many of them were fortunate enough when they retired, maybe after their 30 years, they got full benefits. So, you know, somebody could put in their 30 years right out of high school or even out of college, later 50s, retire, full benefits. They have a pension. So there really wasn't much of a decision, except if you have a spouse, what option do I choose? Once I choose that option, then I'm done. And I've got my pension, and my pension took may have not replaced all of my income, but it replaced a fair amount, and with coverage and health insurance, you know, I'm pretty good. And then Social Security came along, and then you chose when to take that. And then the other thing is that, Bill, is longevity. I mean, people are living longer today. So, you know, 25 years ago, the longevity I know as a male was kind of the mid-70s. So, you know, people didn't have these long periods of retirement. But now people could be retired longer than they actually had a working career.
Right.
Then came about the option of saving in plans, 401k plans and other options. And then pensions started to go away because they were costly. Because, again, companies could not afford to pay a pension out to somebody for 30 years. They just never figured on that when pensions were started. And so it's become more and more complex. Now, the good thing is there's more and more options for people to choose from, which makes more complexity. We didn't have Roth IRAs. We didn't have Roth IRA conversions. We really weren't concerned about taxes in retirement. And Bill, do we think the internet has given people a false sense of security? What do you think?
Oh, definitely. Yeah, I mean, you got a lot of people that are do-it-yourselfers. They want to do their own taxes. They want to do their own financial planning. And, you know, the internet is a great resource for research and you know, researching even the professionals that, that you're seeking to consult with. But Erik, retirement income strategies are much more complex today, as you referenced. And, you know, it really requires some forward thinking to be able to look out, you know, if you're retiring at 65, looking out to 75 and 85 because of the longevity, and determining, you know, what's my required minimum distribution going to be in 6, 7, 8 years from now, so that maybe I can have an impact on that by having a retirement income strategy. When should I take Social Security? And so, you know, I mean, there's 300 or 400 claiming strategies for someone once they hit the age of 62, and spousal benefits and widow's benefits if you're you know, if you're a widow or a widower. So the complexity today in not only the taxability of income streams, but, you know, when certain income streams when you should start certain income streams, like Social Security, like pensions, like Roth conversions. I mean, there is a lot going on, and again, it's individual, it's by individual, and it requires someone to really delve into a client's assets, liabilities, income streams, investable assets to determine, you know, what's going to be the best retirement income strategy for that individual and their family.
You know, Bill, that's a great point as far as complex. You know, there is not one software program that exists that you can punch in the numbers and it solves all of the decisions that you have to make. Social Security, taxes, how much do you need, required minimum distributions. This just doesn't exist as of today. We have to use multiple tools, and I know we spend a lot of time, effort, energy, and resources, money and people resources, in making sure that we have the right tools. And, you know, sometimes people have bad experiences, so they felt like they were sold something maybe that didn't make sense for them, Bill, and therefore they're shying away from you know, seeking out the advice and making the right decisions.
You know, I see it on a weekly basis, Erik. People that, you know, got connected with a product salesperson that, you know, all that product salesperson intended to do was to, you know, put money into a product that they got paid their commission, and then, you know, you never saw that person again. And unfortunately, you know, people are hurt by some of these sales practices because they're in possibly a product that has significant surrender charges that won't go away for years to come. And so we hope that people will avoid product salespeople and look to work with a fiduciary.
Yep, great. And people also understand that when they choose a financial advisor, they have a team, right? So we bring together the team, you know, the lawyer, the accountant, you know, the Medicare, Medicaid specialist, you know, insurance specialist. So we really bring together that full team of people to help determine, are we making the best decision for the particular situation. And we are really adamant that you should not get advice from your neighbor, your friend. You know, what they did may or may not be what's best for your situation. Every situation is different. The tax situation is different. And so that's really, really important. So thanks, Bill. So when you make decisions to hire a financial advisor, what questions should you ask? What questions should you consider, and what answers should you expect from a financial advisor? We'll cover that when we return.
We get a lot of questions about down payment, and it's going to be applicant specific as well as vehicle specific. But the best part is right now, the down payments are as low as I can remember them being, because we have 2 or 3 additional promotions going on right now that different people qualify for. So it's crazy to see. I'm looking at a car going, that's the down payment? There's no way. I do the math again. I'm right. You know, it's just fantastic how low they've been.
Welcome back to Your Wealth Health. I'm Erik Brenner. So you decided to hire a financial advisor, or you're interviewing one. What questions should you ask, and what questions should you expect? So Bill, we have kind of the top 10 list here of questions you should ask your financial advisor. So let's take a look at the graphic here. And we believe all of these are important, really equally important. So let's start off with fee transparency. Bill, let's just share, what does that mean, fee transparency?
Yeah, I mean, I can't tell you more often than not, when I ask a prospect, how is your current financial advisor compensated? They're like, I don't know. I'm assuming that that person, is making a living off of me. And so, so a good fiduciary is going to be very clear about the fees that are being charged and what they're getting in return for that. So in our case, institutional shares of exchange-traded funds, possibly actively managed mutual funds, but the institutional share classes are significantly less expensive. So fee transparency is, I think, one of the biggest questions that you should try to have answered when you're interviewing a advisor.
Bill, I often say that, in what we do in investing, there's not a lot we can control. So, we can't ultimately control the markets. We can control kind of risk and how much risk you want to take, but we can't control a lot of things that are on the outside. But one thing we can control is cost. We can control cost, which affects returns. So let's go through the list. Fee transparency, regulatory controls, experience, proactive communication. How do they communicate with clients? Access to information. Do you have access to your information? Do you know what your returns are? Personalized service. What's the investment philosophy that their firm really carries out? How do they come to the investment decisions that they carry out? And are they limited on product? What's their client profile? Who do they work with? Really, where are they best suited to help people? The client experience, and then what happens if they're not there? Things happen. People retire. Unfortunately, people become ill. What happens in the areas of succession? So, Bill, all of these are important things to ask the advisor that you're talking with, or your current advisor.
Well, and Erik, you brought up in the last segment about the team concept. So, what are you actually going to receive in exchange for the fees that you're paying? In our case, we like to see ourselves as the quarterback of a team, and that team could include and should include a CPA, an estate planning attorney, potentially the property and casualty agent concerned with liability coverages and umbrellas and the limits, the liability limits that you have on your home and your vehicles and things like that. So that's what comprehensive advice it is. Our title is private wealth advisor. Well, that's different than a financial advisor. That's somebody that's doing all-encompassing planning with all of these professionals in mind versus potentially a product pusher or somebody that has a limited suite of investment tools at their discretion. We find ourselves with the four of us with over 100 years of service, of experience, bringing to the table a vast array of solutions for our clients as we act as a fiduciary for them.
So out of the 10, highlighting, the fee transparency, experience and access to information. So as I think about experience, here's kind of how I think about it. The 5 on the team, the advisors that work with clients every day, we all have retired many times in our career. Not personally, but we've helped clients from kind of start to finish and during their retirement. And so I think it's important that when we're talking about retirement and the decisions you have in planning for and getting to retirement, you have someone that has that experience. I think about if I had something going on and I needed some sort of heart, right, vascular work, I'm going to want a surgeon that has had a lot of experience in what I have, and they're just not trying it out for the first time. So same in our industry. Also, Bill, you mentioned access to information. Making sure that we have the latest tools and information to really give the best advice, because Now with technology, it's great that we have those tools, Bill, but how you take the tools and get it to the right situation is a whole nother piece that's important.
Yeah, I mean, the tools that an advisor has access to is critical. I'll give you an example. So, someone says, when should I take Social Security? Well, that's a complex question. So we need to, so we have a tool that allows us to analyze the Social Security, whether it's a single person looking at a break-even calculation, or if it's a couple, that's the most complex calculation, as to, exactly how much money are you going to collect over your life expectancy, and how can you maximize that. Tax clarity, being able to do it, that's a whole nother software that allows us to analyze the effective tax rate and potential withdrawals. Required minimum distribution calculator for the future required minimum distributions. Those are just 3 calculators in addition to the suite of financial planning tools to determine, am I on track for my goals, and college calculators. It's just on and on and on. Whatever the client's goal is requires specific tools to help us calculate whether they're on track for that goal or not.
Yeah, and you mentioned the tools, which we talk a lot about it because it is an important piece. And making a decision with Social Security affects so many other areas. It's not just about the decision on Social Security. Another one on this list is succession. So, and really what we mean by that is that if you're working with an advisor, and as I said, what happens if and when they retire? Or what if they become ill? What if they have family circumstances to where they have to take off for a period of time? Most of the time when people have an advisor relationship, it's something that you want to have long term. You don't want to go and then continue to switch. And in a lot of cases, a lot of firms, that when that advisor leaves, for whatever reason, clients just get automatically reassigned. They don't have a plan, and in fact, it's about 60 to 70% of advisors out there do not have a succession plan, which means what happens if they don't have one in place, and so you could very well be left out in the cold. Well, the good part about not having to write down all these checklists and things we've talked about and the questions is we've got resources for you. You can go to hilltopwealthsolutions.com, and particularly under the guides and checklist, you will find the 10 questions you should ask, as well as you'll find a lot of other information on our site. We try to keep it very informative. We consistently and constantly update our guides and checklist. So you'll see checklist on things you should consider if you're 1 year from retirement, things you should consider if you're 5 years from retirement, how to go about Social Security and actually filing for Social Security. We have a recent article about Roth conversions. So all of those things are available on our website. In addition, you can actually select and get a 30-minute, no obligation meeting with one of our wealth advisors, and we'll be glad to talk with you and see if we can provide any benefit. There's really no harm in doing so. Well, we're out of time for this Saturday morning. So for Bill Davis and the entire Hilltop team, we want to thank you for watching, and we'll see you next week.